Edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 7th of January. Starting off with the FTSE 100, and here we're between the old February resistance line from last year, 7600, let's call it, and the May resistance line projection up there at 7780, but waiting for a break outside those two levels. And so far the RSI not giving us too much, but at least we haven't quite broken that uptrend line there from the end of October. We did intraday on Friday, so it's really waiting for a break either of the 7780 or 7600. Positive is the way that both the 50 and 200-day moving averages are rising, so that suggests that there could be a golden cross buy signal sometime over the course of January. And the run up to a golden cross tends to be the strongest part in the cycle. Obviously, we'll believe that when we see it. Through 7780, there's the chance of retesting last year's resistance at 8050, but at the moment that feels like that's quite a long way away. On the downside, probably not looking for anything worse than 7500 now, given the way that 50 and 200-day lines are rising, and that was the resistance back in February. But in theory, we are in a range within that post-March rising trend channel between 7780 and 7310. Moving on to the DAX, and here we were waiting to see whether we would, or how we would manage to finesse the recent pullback from 17,000. The initial guess was that we would bounce off July resistance at 16,500 rather, and that sort of happened so far. Nice end of week move for the DAX. Below 16,500 risks down to 16,100. The the August-September resistance, but so far looks like we might get away with whatever we've seen so far. Moving on to the Dow, and here, as the market's been leading the party, rising October trend channel, trying to work out exactly where the floor of that channel is. Let's say that Friday did manage to keep that in play, and so we're still with that very steep October line. That would suggest that we'll find support above 37,000, and we could head as high as 39,300 by the end of next month. Want to see a break of that resistance line there from March last year at 38,000 to get us on our way. That would be a decent trigger. On the downside, as I said, 37,000. Not looking for anything lower than that, but obviously the next level down would be 36,200 initial December resistance. Moving along to Bitcoin, which has us looking for progress again within a rising October trend channel. This is also a very steep one. So far, we've managed to have multiple bounces above the 50-day line, a rising 50-day line, which tends to be a leading indicator on the upside. We've got an uptrend line in the RSI window since back in August, which is very impressive. And we bounced off RSI 50 a couple of times in the recent past. So far, it looks like we are ready for a move towards 50,000 by the end of this month. End of day close through 45,000 on the next occasion should be enough to do the trick. If we do break down, then it's 40,000 and then 38,000 at the old November resistance. On to gold, where it's been a bit volatile above the 2,000 level. We had that 2060 line there, which has now really become almost irrelevant. It's really up to the 50-day line there at 2020 and then breaking 2100 to give us a move up to that late May resistance line projection, currently pointing up to 2180, which we're looking for by the end of next month. But I suppose the longer we spend above 2,000, the better on this market. And RSI is at 52, which suggests that we are in a glass half full rather than glass half empty situation. Moving on to the stocks, and lots of esoteric ones in this selection today. Ones that I missed over the last week or two, or last few weeks. First one is Acquisition Company, which apparently is a SPAC. Here we had a gap close buy signal. We're closing above the top of that gap from last month at 6.2 pence. Above that, we're looking for the shares to head back up to 10.5 pence by the end of this month, which would take them basically back to where they were before the rug was pulled rather unceremoniously back in the early part of last month. You could also argue that there's bullish divergence here. So we had that lower low to start this month, but the RSI actually flat there. So that is obviously that's reflected in the rebound that we've seen so far. On to Bluebird, and have covered this, I think, a couple of times, but worth noting the broadening triangle base there since back in July, and the prospect of 1 pence as a target there at the 200-day line and the top of that triangle. And that upside valid while we hold above the post-November resistance around 0.65 pence, above 0.65 looking for a penny. And I think if you look closely, you'll see that the 50-day line is now rising, which tends to be a decent leading indicator. Another stock which hasn't had much coverage here has been Checkit, but here first signs of a turnaround with the higher low for January, potentially a rising trend channel base, and above 20 pence, looking for 32 pence by the end of next month. If you're cautious, obviously wait for the 25 pence area to clear before assuming that we are out of the woods. Stock which is of note, because I haven't covered it for ages, largely because it's been down since September, is Futura Medical. But we've had a good week last week, which is a surprise given that nobody's really back from the holidays. But we've broken a line of resistance there, broken that falling wedge from September at 27 pence. Above that, looking for 40 pence as soon as the end of next month, maybe even by the end of this month. Bullish divergence there as well. And the interesting part, I suppose, here is the way that we've had a bear trap rebound from below the late October support there at 27 pence. One of the New Year's resolutions here is to try and get in earlier on potential turnarounds, because people don't seem to be very impressed if you just call a stock which is already rising to go higher. On to another relatively obscure name, Holders, and here we got the potential of a broadening triangle base. The floor of the triangle there around, let's call it 20 pence, and above that looking for up to 80 pence by the end of next month. Nice end of week close above the 50-day line at 40, so really we want to see the shares remain above 40 pence. I'm sure the spread here is horrific, so it is a rather difficult one to grab hold of, and there is also bullish divergence with the lower low to start January, but higher RSI trace there in the indicator window. A stock which I feel I missed out on is Huddled rather, and here we had the director buying I think below 3 pence back in November, and that's obviously done the trick. I think the CEO's got 13%. Here we've got a rising trend channel pattern, I suppose, and initial target here up to 4.4 pence, which hopefully will be done in the next week or so. If you're a fan of the shares and looking for greater glory, then probably it could be along the lines of the line I'm drawing there, up to 6.3 pence, which is an October 2022 resistance line projection. But let's try and get to 4.4 pence first. The upside valid while we hold above recent resistance, the recent resistance break at 3.2 pence. I think that's the key there. I think we've also got the 50 and 200-day lines rising now, so it looks like we're going into a golden cross after that October-November bear trap rebound that we've had. Nuformix is next, and here finally looks like we've got the big breakout. We're looking for this for quite some time. You can see that the price action over much of 2023 was not exactly great, just a mess really, but in a range between 0.24 and 0.34. We've broken that quite comprehensively, looking for the top of that rising trend channel from the beginning of 2022 as high as 0.5 pence over the next 4 to 6 weeks, maybe a bit sooner, given that break that we've seen at the end of last week. Lots of people trying to work out where Premier African is going, probably including the powers that be there. But here we've had another trend line break. We've had many false dawns here, so one has to take this with a pinch of salt. But there is bullish divergence here, and to go with that trend line break around 0.22. Really, we'll want to see the shares break back above 0.3 pence, which is post-November resistance, on a weekly close basis, and then hopefully the shares could then get back up to the upper 40s by the end of next month. But obviously that situation rather complicated by funding issues or potential funding issues. It's been a long time waiting for Prospex to turn around, and it still may be a long time, but we have an uptrend line in the RSI window from July, and we're back above the old support there around 5.2 pence, which was September-November support for the share. So that is encouraging. It's also a gap close buy signal. We've filled the gap there, the gap down that we had back in the middle of last month. Ideally, we see the shares comprehensively break that line of resistance there from the end of June at 6.25 pence to take them up to 8 pence by the end of next month. I think that's probably giving the shares enough time to get their act together. But there's nothing to stop, I suppose, the shares keeping on consolidating around the 5p level, but just the first signs there technically that we've got a turnaround. Another stock which doesn't get much airtime here or anywhere else is Provexis rather, and here we've got bear trap. In fact, we've got a mixture of things. We've got an island bear trap reversal, so gapping down, then gapping up, and then we've got a V-shaped bull flag as well, above a rising 50-day moving average. So that suggests that above the 200-day line at 0.63, we could head up to the top of that broadening triangle from April as high as 0.92 by the end of next month, or even sooner. That would be quite a coup if the shares finally turn around and stay up. Another stock where people have been waiting a long time for action to occur is Synergia, and here bear trap island reversal, so gapping down to new lows and then gapping up again. Here we're looking for the shares to remain above 0.07 and the latest gap as a starter. Initial target here 0.11, which is that red May resistance line. Looking for 0.16 by the end of next month, and again accompanied by bullish divergence, so looking a bit better than this has for quite some time. On to the last two. First one is another one where angels may be fearing to tread, but potential of a broadening triangle base here at Sondrel, and bouncing off that support line projection from September around 3p. Above that, looking for a best case scenario target as high as 11p by the end of next month, backed by an uptrend line in the RSI window. But again, this is not for widows and orphans, and it's been a complete nightmare in the recent past. Finishing off with another stock which I missed out on, Trellus Health, and here we've got a broadening triangle base. Top of that triangle heading towards 10p, hopefully by the end of next month. Like to see an end of day close above the 200-day line at 5.8p, and then that could take us up to the 10p by the end of February. I think the main thing here is that we stay above the old August support there at 4.75 in the meantime. That's it from me today. More updates tomorrow.